we are joined by Anuj Gupta, VP at Research and Product at IFL Securities. Anuj, a very good afternoon to you. Thank you so much for joining in with us. I want to firstly talk about this Groundnut Futures that we'll see that will be starting to trade very soon. What would be the importance of this to a trader? How does a different sections in the supply chain actually start using this for their benefit?
Groundnut is a very big product in the edible oil sector. It contributes almost 25% in overall edible oil sector, and even in Gujarat, it's contribute almost 40.5% in overall production of edible oils in the India. So groundnut is a biggest crop in the India in terms of edible oil sector. So as now we are expecting that NCDX is now launching the groundnut oil futures contract, so that will impact definitely and give provide support to the producer, farmers and exporters, because groundnut we also export to the many countries like South Africa, Sudan and Europe, and in the US also. So as far as concern about the crop size, crop is the biggest in the India, so it's required a hedging mechanism. It's required price blocking, because in if you see in last 10 years there is a no such big movement in the groundnut oil and even groundnut production. So people are shifting their crop from groundnut to cotton, because Gujarat groundnut and cotton are the biggest crop, and due to this no biggest movement in the groundnut, so people are shifting in their crop diversification to the cotton side. So as far as concern about the farmer side, farmers are now getting a good amount or a good price, a fair price for the cotton, for this groundnut oil. So we are expecting that if groundnut contract will available in the NCDX platform, so a farmer will hedge their positions, because they are not getting the price in the spot market due to the lack of the awareness. So I think by doing this hedging and by doing the using this future contract platform by NCDX, they will get a huge you will get a good price, and also they can hedge their positions by using the NCDX platform. However, this is exportable commodity. So exporters who are using this commodity to export in a different country, so they will also use this derivative contract to protect their price, and also by doing the hedging they can protect the export price also. This commodity derivative contract now available in the NCDX will provide a good support to the all the market participants, might be trader, might be farmers, and as well as might be the exporters. So this is a big commodity. So I think after this launching this product, there might be a good volatility in this product, in the commodity derivative.
Because it's groundnut is used everywhere across a lot of, like you were saying, edible markets as well. A lot of FMCG players also use it as well. Now, I just want to understand, if you could give us an example or a case study in terms of that today if someone is actually holding some physical quantity of a groundnut, and then when you want to actually shift to the derivative market, how can one use this derivative market, the tools that are available in terms of the long position, short position? Obviously risk cannot be 100% averse, but how is that they can reduce their risk? How does all this shape up over there?
See, this is a very good question, because in last 2 years when we saw that government disallow the edible oil contracts in the NCDX, so we saw that now people are demanding this edible oil contract in the futures market. And if you see in last 1 years edible oil contract prices, like soybean prices and edible oil other prices, refined soya prices are on very no dives. So however prices are going down, so people need a hedging to the lock the prices. So in that case, suppose somebody holding a groundnut, and they are expecting that groundnut prices will go down, because we are seeing a good monsoon, and due to this good monsoon we are expecting a good production in the kharif crop. So if farmers are expecting that there is a good crop and the price of the commodity will go down, so they can short their same quantity on the exchange platform. So in their one hand they are losing the price, and on another side they are getting the price, so getting the benefit. So in that case, if they hedge their same quantity on the future contract, by doing hedging they can lock their prices. So these future contracts are basically used for the risk management as well as the price lock. So one in hand, if they are holding a physical commodity, they can sell same quantity on the future exchange. So by doing this, they can lock their price and even hedge their risk management. So future contracts are basically for locking the price and risk management. And on another side, if somebody wants to buy groundnut product from the physical market, but due to this non availability they can buy the contract in the futures market on the exchange platform. So they can also get a benefit of the rising prices, because if commodity has a shortage, so they will price will increase. So by buying the on the exchange platform, they can get a benefit for the rising pricing. So on the both side, if somebody wants to holding the commodity, they can use exchange platform, and if somebody wants to buy commodity, they can buy on a directly by using this derivative contract. So this derivative contract will useful for the producer, this commodity derivative contract useful for the farmer and also for the exporter, and also who wants to buy for their future demand. So I think this future contract, derivative contract are useful for all the market participants.
Right, Anuj, and I just want to understand, because obviously this is a crop which you grow. There's, like you were saying, that, in terms of Kharif season, Rabi season, all these seasons also start coming into play for the groundnut. Now, what are the fundamental points that one should watch out for, where we could expect seasonality is obviously going to be a factor that comes into play. If rains are an issue, that could be a factor. So what would that factors that one should actually list out and keep an eye out on that could impact the pricing of this as well, in terms of the future pricing of the that we could start seeing traded very soon as well?
See, now we are out of fear of the El Nino, and everybody last time talking about the El Nino fear, and we have seen a good monsoon coming in the India. So, and India is covering all the major agriculture producing area like Maharashtra, Gujarat, and now MP and Rajasthan. So, Rajasthan and Gujarat are the biggest producer state for the groundnut. So, monsoon will be the biggest part, or fundamental part for the groundnut production, because after this monsoon, farmers will start sowing the groundnut production. So this will the biggest thing of the debt. And after that, the export demand, because we are exporting this commodity to different countries like US, Europe, and South Africa. So this is the biggest second challenge for the commodity. Third would be the China demand, because China is the another very big producer for the groundnut. So the crop situation in the China will definitely impact the price of the groundnut. And we have seen last year, due to drought situation in the China, there is a less production of the groundnut. And the fourth one is that overall sentiment of the edible oil sector, because in last 2 years we saw a very huge momentum in the edible oil sector, and in last year we saw that edible oil prices were going down, and right now on a very lower level. So the overall edible oil sector, edible oil commodity sector will impact the groundnut price. So these are the four factors which are very important while setting the target, or while setting the production, or while setting the price of the groundnut as a commodity.
So these are the important factors that we should keep in mind when you're setting the price or looking at the commodity as well. Just in terms of, I want to understand that if you could tell me just the importance that it has in terms of the price discovery for the derivatives market. How would that also come in with the groundnut futures coming to trade? How should the price discovery part be important as well?
Definitely, as exchanges are the playing a very good role while price discovering, because in the last 1 year we saw a very good example of the edible oils, because due to this non-availability of the edible oil contract on exchanges, people are not able to discover the good price of the edible oil sector. And now all participants of the edible oil sector are facing the same problem, because they don't have the facility to hedge the product. So now we are seeing that the importance of the exchanges are coming now, and people are looking towards the exchanges for the price discovery or the hedging mechanism. So I think the exchanges are doing playing a very important role for the price discovery and as well as the risk management. So when this commodity is available to trade on the side, so there might be some trader, there might be some hedgers, there might be some exporters, and all are doing they are trading, or they are putting their orders on the exchange, and by doing this they are discovering the prices. Definitely market is on the spot side, because this is a very big commodity in Gujarat and Rajasthan. So we are expecting a very good participation from the Gujarat, and also from the Rajasthan side, and also definitely who are doing a physical production, physical trade on the edible oil. So they will also participate in this contract. So I am expecting that we are every participants who are related with edible oil, they will definitely take part in the commodity future contract, and the exchange platform will definitely use for the price discovery mechanism.
Thank you so much for joining in with us and giving everyone an understanding of how groundnut futures could be traded, an example on how one should actually take these positions coming in as well, and what are the important factors to watch out for when you're actually looking at in terms of pricing as well. Thank you so much, Anuj, for joining in with us. But